Good evening everyone, and thank you for joining us on Varun Beverages Q1 CY 2018 earnings conference call. We have with us today Mr. Ravi Jaipuria, the chairman of the company, Mr. Raj Gandhi, Group CFO and Whole-Time Director, Mr. Kapil Agarwal, the CEO and Whole-Time Director, and Mr. Kamlesh Jain, CFO and Whole-Time Director of the company. We will initiate the call with opening remarks from the management, following which we will have the forum open for a Q&A session. Before we begin, I would like to state that some of the statements made in today's call may be forward-looking in nature, and a detailed statement in this regard is available in the results presentation shared with you earlier. I would now request Mr. Jaipuria to begin the proceedings of the call.
Good evening, everybody, and thank you for joining the call. I hope all of you had the opportunity to go through the results presentation, which provides detail of our operational and financial performance for the first quarter ended March 31st, 2018. We are happy to report that we have made a strong start to 2018 with robust revenue growth of 24.5% and profit growth of 186.3%. The company has undertaken several business strengthening initiatives in 2017, enhancing our product mix and making several value-accretive acquisitions which are now bearing fruition. Volume growth has been strong on the back of consolidation of recently acquired territories in India. What is further encouraging is that the volume growth on an organic basis has also been strong and bodes well for the upcoming peak summer season sales. Further, the introduction of new product categories like Tropicana and Sting has resulted in better portfolio mix and improved our realization during the quarter. As I just mentioned, we have strengthened our presence in the fast-growing categories during last year. We entered into a strategic partnership for selling and distribution of the larger Tropicana portfolio that includes Tropicana juices, 100% Delight Essentials, as well as Gatorade in the sports drink category and Quaker value-added dairy in territories across North and East India. With VBL already holding manufacturing, sales and distribution rights for Tropicana Slice and Tropicana Fruits in North and East, we are confident that we can leverage our knowledge of the supply chain process, existing distribution network and chilling infrastructure to help expand the franchise for brand Tropicana in these territories. In addition to these new product categories, during the quarter, we have further expanded our juice portfolio with the launch of fizzy drinks in 7 different flavors, leveraging the Slice brand with wider recognition and strong brand value. Fizzy Slice will have 11% juice content and will include both ethnic flavors like Jeera and Guava Chili, as well as mainstream flavors such as apple, orange, lemon and lime, clear lemon and cream soda. Further, all the drinks have lower calories and zero sugar content, in line with PepsiCo's plan to intensify focus on health and nutrition and reduction in sugar content. All flavors are available in 250 ml PET bottles at an attractive price point of Rs. 12. The introduction of all these product categories not only augurs well for our long-term growth prospects, but also will reduce seasonality, enhance profitability, and augment return ratios. To conclude, we are excited about our prospects going into the peak summer season. We will be focused on consolidation of the recent territories that we have acquired. We are confident that the learning knowledge and mastery over the process that we have attained will help us garner market share in these territories. As we increase our penetration further, we now account for more than 51% of PepsiCo's beverage sales volume in India, with presence in 21 states and 2 union territories. We will continue to innovate and work with PepsiCo to roll out new products, staying in the path of relevance of our customers. To push our strategy, intent of driving profitably growth. I would now invite Mr. Gandhi to provide highlights of the operational and financial performance. Thank you.
Thank you, Mr. Chairman. Good evening and warm welcome to everyone for joining the investors call. Let me provide an overview of the financial performance for the first quarter ended 31st March 2018. As you are all aware by now that consequent upon the introduction of the GST with effect from July 1st, 2017, central excise value-added tax have been subsumed into GST. In accordance with Indian Accounting Standard 18, on revenue and Schedule 3 of the Companies Act 2013, unlike excise duty, levies like GST, VAT, etc., are not part of revenue. To facilitate comparison, we have provided the adjusted revenue calculation on slide 16 of our presentation. Revenue from operations adjusted for excise GST grew 24.5% year-on-year in Q1 calendar year 2017 to rupees 10,947.7 million. Total sales volume were up 19.7% year-on-year at 80.4 million cases in Q1 calendar year 2018 as compared to 67.2 million unit cases in Q1 calendar year 2017. Further, the introduction of higher realization products has driven 4.8% value growth during the quarter. We have seen strong organic volume growth in India at 12% year-on-year in Q1 2018, which augurs well for our peak season sales. Organic volume growth on a consolidated basis was 9.8% year-on-year for the quarter. Enhanced portfolio mix coupled cost efficiencies brought a thorough strong volume growth. Consolidation of contiguous territories and robust backward integrated infrastructure has led to a 61 basis point expansion in our gross margins during the quarter. The increase in PET prices has been offset by a moderation in sugar prices. Average price of other raw materials has remained stable during the quarter. We have seen an increase in our freight costs this quarter. We got the approvals for the commencement of operations of acquired plants in a particular sub-territory towards the end of the quarter, and the sub-territories without plants led to the increase. Till then, we were servicing these from existing facilities in neighboring states. EBITDA increased by 25.8% year-on-year to rupees 1,747 million in calendar 2018 from 1,372 million in quarter one calendar year 2017. EBITDA margins improved by 16 basis points to 15.8 in Q1 calendar year 2018. The robust volume growth in India and gradual turnaround of loss-making foreign subsidiaries have resulted in PAT growth of 186.3% year-on-year to 197 million in quarter one calendar year 2018 from rupees 69 million in quarter one calendar year 2017. Depreciation and finance costs have increased during the quarter on account of inorganic acquisition primarily funded through debt. To conclude, the year has started on a positive note and we remain enthused of our prospects going into the peak season for our products. We are excited about the potential of our business and are confident of further accelerating the momentum in line with the historical trend of strong growth delivered by our business. On that note, I come to an end to the opening remarks and would like to now ask the moderator to open the lines for the Q&A. Thank you very much.
So should we begin with the Q&A now?
That's right.
Thank you very much. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your question. Anyone who wishes to ask a question, please press star and 1 at this time. The first question from the line of Bhavesh Shah from CLSA. Please go ahead.
Hi, good evening, gentlemen. So 12% organic volume growth is certainly very impressive. So just wanted to understand, is there any base effect here, or are we witnessing strong start to the season? Essentially, I'm trying to understand underlying demand trends during first quarter.
No, we've had a good first quarter, and this is on top of a good first quarter which we had even in 2017. So a double-digit growth is looking very positive, and there's no reason going forward it should be any different.
Okay. And so what is the contribution from the new territories in terms of million cases during the first quarter? In terms of absolute million cases?
Something 6 and some fraction million cases because that quarter.
Okay. And so you also mentioned that during the quarter you serviced some of the few new territories from the existing plants. So when do you expect the overall situation to normalize? As in, when can we expect the efficiency levels for the new territories to improve from the current levels from here on?
So it has already normalized. By end of March, most of the territories have normalized. The balance, the last one got normalized in the first week of April. So now we are producing our products in the new plants which we have required, because we have to apply for new licenses, new FSI number. All those changes had to be made. So everything is on stream now during the peak season. And the only territory which has come without a plant is Bihar and Chhattisgarh. And those we will be servicing from our plants which are nearby and not too far from the territory.
Okay. And so any plans of getting new factories or new plants in some of these territories, or it's still you would be servicing?
Well, at the moment, we will be using our capacity which was surplus in the adjacent areas. And I think this will help us use better utilization of our capacities. And as and when the business grows, the volumes grow, when we need more capacity, then we will come back to maybe enhance and put a plant in Bihar ultimately, but not at the moment.
Sure. And just one more question on contribution of Tropicana volumes. So what was the contribution from this portfolio during the quarter?
It was about 4 lakh cases, 400,000 cases. And the distribution got streamlined and was started only from 1st March 2018. So in the first month, it was 400,000 cases.
We've only had 1 month, and I think in that month we have just started distribution, which is about 400,000, as Mr. Gandhi said. But going forward, of course, it will be the volumes which Pepsi was doing earlier and the growth which they will get because of our distribution system.
Sure. And so just in terms of, just coming back to Tropicana, what kind of volumes we can expect from this portfolio from the full year perspective in CY18? If you can share some thoughts on that.
PepsiCo was doing close to about 7.5 million cases, and we hope to do at least minimum the same or better with our distribution enhancement.
Sure, sir. Perfect. So thank you very much. Yeah.
Thank you.
Thank you.
Thank you. The next question is from the line of Pritesh Shah from Lucky Investment Managers. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, I just wanted to first seek your comment when you said 12% organic volume growth in India. Tropicana started in Q1 and that's a part of that 12% organic volume growth, or it is outside that 12% organic volume growth?
That's a part of
That's part of it.
So, if you assess the carbonated soft drink side, what kind of volume growth carbonated soft drinks would have done?
That 11.3, 11.4%.
This is organic.
That's organic other than Tropicana.
Sorry?
Other than Tropicana, that's the organic growth.
Okay. My second question is, the previous participant asked about normalization of operations of the acquired businesses.
Yeah.
So I see margins, on combined basis also being about 16% for the whole company. So just wanted to understand these assets when they were acquired, let's say a quarter back, what margins they were operating at, and now what margins are they operating? Some ballpark for all assets put together.
No, you see, as we have always said that any territory which we are acquiring and which is a contiguous part of our territory, the margins will become the same. It's just that initially when we are going into a territory, it has its own challenges. So it takes between 3 to 6 months to stabilize that territory. But our margins would be the same what we have been enjoying in our rest of the territory. So there's no reason for it to be any different.
I congratulate it for making it happen in 3 months' time itself.
So we are quite sure. And as it looks that actually in the first 3 months when it was a low season, that we have been able to consolidate the territory, and we are already seeing growth in those territories which we have acquired.
Okay. Just understanding your business model a little bit better. Now we have, products other than the carbonated soft drinks, which are also getting material. So there's Tropicana, there is water. On the EBITDA per case side, it's the same facility. So you sell water or you sell carbonated soft drinks. How will the profitability per case differ, amongst all these product lines?
See, the per case profitability will always differ in each product. But as a percentage, we are trying to maintain approximately the same profitability for water, juices or CSD. Because of the value being higher or lower, per case value keeps differing. But percentage is not differing much.
Okay. Lastly, I want to check the volume growth outlook that you would have on organic basis for the calendar year 18.
Well, I can only tell you the first quarter, which was on a high first quarter 2017. We have grown in double digits and the business is looking robust. There's no reason why we should look any different, but more than that, I cannot tell you. But it's looking very positive.
And CAPEX numbers for CY18?
CAPEX numbers, as given in the last call, stays the same. The first part is that the organic CAPEX is, we gave a number of 150 and we are well within that number. And second is we had given the number of the new territories which we have acquired and the 2 new plants which have come up, one in Zimbabwe, another in Nepal. So we are well within those numbers which we are given. Apart from that, there is no CAPEX planned for the current year 2018.
Which new plant is this, sir?
One in Zimbabwe, another in Nepal. Nepal, in fact, came in production yesterday itself.
Okay. So your India CAPEX, you need not do any CAPEX bearing the maintenance?
No, we have not planned any CAPEX and we don't need any CAPEX for this year.
Until what time would you have a maintenance CAPEX in India?
No, maintenance CAPEX we have every year and that we allocate in our P&L. So it doesn't go in our capital expense. It goes under the maintenance. It goes under operative expense.
So my question was, when would you need fresh capacities in India?
No, fresh capacities, as we said, depending on how the sales growth comes in. If we have a couple of years of double-digit growth, we will need it very soon. But if we don't have double-digit growth, then we don't need capacity at the moment. I mean, part of our capacity will get used in the 2 acquired territories where we don't have plants, which is Bihar and Chhattisgarh. And as we are saying that we are growing in double digits this year, so reasonable portion of our capacity will get utilized this year, but we don't need any capacity going forward immediately.
Thank you and all the best to you, sir.
Thank you.
Thank you. Ladies and gentlemen, you may enter star and 1 if you wish to ask a question. The next question is from the line of Sameer Gupta from India Infoline. Please go ahead.
Sir, 2-3 questions from me. I'll put it up front because then I have to go on another call also. So, sir, firstly, on the organic growth that you have seen basically at 12%, just want to understand what has changed, because not only due to demand GST you saw sort of effect, but even before that, I believe organic growth for the last 4-5 years average would be about 6-7%. So what has changed there? That is my first question. Secondly, on realization, you have seen in India about 6-7% increase. I believe there is a mix effect, but excluding that also, I mean, what would be the price increase actually on the MRP level and at the net sales level in case both of them are different? And also just wanted to understand for Tropicana and Gatorade, etc., what would be the capex required and whether it will be split over 2 years or whether it is coming only in CY18 or CY19. That's it from me, sir.
Well, first of all, double-digit growth was a reality for a long time for us in the last 25 years, so it was actually abnormal for us not to grow in double digits. It was the last 2-3 years. So I think we are back on track to the growth levels which we have been enjoying for the last 25 years. And we are making sure that we are making the changes in our portfolio, adding products which the market is looking for, if they are looking for less sweetener products or if they are looking for more juices. So we are making sure we are making the changes and adding the new products which are required. And we feel going forward, there is no reason that these numbers cannot be achieved or should not be achieved. And the result of that is the first quarter growth, which is our weakest, one of the weakest quarters we have. But if the growth comes in that now in the peak season, we don't see any reason why this quarter we should not be growing similarly. Your second point was
reasons for increase in realization.
The realization, of course, has increased because of our launch of new products which are at higher value, which was, of course, Tropicana and Sting, which is our energy drink. So the realization on both these products are significantly higher than CSD or water. So that is giving the value proposition. And the capex, what you have asked in 2018, we are not putting any further capex. And going forward, we have 2019, if we will require to make a facility for Tropicana, that we will discuss in the next board meeting and take it forward.
Sir, this is Sameer. Percy has dropped off the line. Just wanted to clarify on this. When you say 6%, this is entirely coming from mix or there is not any price?
We did not increase prices, no.
MRP level, there is no price increase?
There was no increase in MRP.
And sir, secondly, on this plant in Pathankot that you are planning, it's still in just the envisage stage and there's nothing on the ground that you're done?
There's nothing on the ground at the moment, and it won't be for this year.
Okay, so all the sales on Tropicana Gatorade would be from third party or from continuing?
That's right. That's right.
Okay. Thank you, sir. Thank you. That's all.
Thank you. The next question from the line of Rohit Chotia from Kotak. Please go ahead.
Yeah, hello everyone. A quick few questions. The first one really is just trying to understand if you can give us a ballpark number here or some understanding on, what would be the share of PepsiCo in Varun Beverages markets versus other markets. So you are now, controlling around 51% of PepsiCo's BSD volumes in India. What would PepsiCo's market share be in your markets versus where, there is someone else who's running the show?
Well, in our markets, it's a little above 40%.
Sure. And the overall number is in the low 30s. Is that correct, Pan India?
I think very close to it, yes.
Last year when Rohit, it was coming around 38%, but it may be something different because the research reports are, giving different numbers.
No, if you, 38 was coming nationally, but if you take out our territories, since we are at about 40% plus, the other territories would be in low 30s.
35, 36, because it's 50, 50.
No, maybe even lower, a couple of points lower.
Maybe even lower. Sure enough. Good to see speed of new launches from you, and I'm sure that is contributing to growth. One has also seen Coke being a little active on new launches. Would you say the environment, the underlying demand environment is now more conducive for new launches after, last couple of years were slow on this front?
I think the market is looking very positive, and I think all the negatives pretty well are over with the demonetization, with excise going up every year, with, GST being stabilized. I think we are much more stable, and I think all the past knee-jerk reactions are all over. So I think we are more stable, and I think we have not changed any pricing also. So we are getting a reasonable growth, and I think it will continue. It should continue.
Sure. Do you sense a need to take price increases at some point in time this year? How is the RM basket in terms of, inflation?
So it's looking okay, even though the petrol price is going up, our raw material price for resin has gone up, but luckily the sugar has come down, so it's balanced it out, and we don't see any reason for us to take any price increase.
Sure. So unless oil goes up further, you're not looking at a...
Well, I don't think even if a little bit it goes up, I don't think we will be negative on our RM. Fortunately, sugar is coming down, so we are in good shape. And sugar is a much bigger component than resin.
And does your backward integration help on the resin front? Are you more competitive than others?
No, we are. That we have an extra edge of about 4 percentage points or more than anybody else. So that will continue. That doesn't change. You see, those are conversion costs.
My question is, does your advantage go up in the inflationary environment?
Well, I'm not so sure, but I think it will maintain. It will never become negative. It will keep on being positive. As the value goes up, but percentage-wise, I don't think it will make more difference.
Sure, sounds good. My last question really is, have you seen, any thought process at PepsiCo level in getting into, let's say, milk-based drinks, dairy-based drinks? Coke has entered this category.
We are also discussing with them, and hopefully we are all working together. And as we have developed new products, I'm sure we'll develop dairy products also.
So you think it's and you also have outside VBL, but you have a dairy presence. So you think it's an opportunity worth pursuing for PepsiCo in India?
Absolutely, it's an opportunity, and we are looking forward to it and discussing with PepsiCo how to take it forward.
One more question, if I can squeeze. Do you think over time the new products that you're launching are going to be margin accretive, or do you think it will be margin neutral, more or less?
They'll be about neutral. So we are making sure, wherever there is juice content and wherever we get benefit of GST, we are passing it on to the consumer so that we are competitive and but we are keeping and maintaining our margins.
So fair to say your focus right now, primary focus is volume growth and with sustainable margins being the secondary target.
Absolutely. Absolutely.
Sounds good. Excellent set of numbers. Thank you.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Anand Shah from Axis Capital. Please go ahead.
Hi, sir. Just a couple of questions. So one, can you give any commentary on the international business, how it's done, particularly
international business is doing very well for us. We were short of capacity in Nepal. Our plant has started yesterday, so we hope to get reasonable revenues and growth from Nepal. We entered a new territory of Zimbabwe where I think we will way exceed our targets and doing extremely well. So our Zambia plant is also doing extremely well. So there's internationally, I think most of our plants are doing well. We see positive growth like in India.
And what would be the volume growth, let's say, for international business this quarter?
See,
overall,
Zimbabwe is Zimbabwe, there was no plant there, so we were...
So sorry to interrupt you, sir. Actually, we lost the audio from your side for a fraction of seconds. Would you mind to repeat yourself? Thank you.
Yeah. Zimbabwe, for example, is a new territory. So this was being serviced out of Zambia before, but now we have put up a greenfield plant there. So the growth and the numbers are going to be a difference in hundreds of percent. So, and Nepal, since we were short of capacity and now our capacity coming up, so the growth we are expecting is much higher than normal growth, which will stabilize to, after a while and then start catering to normal growth in a year or so.
Okay, thanks for the outlook, but my question essentially was on this quarter also. I mean, what would have the international business growth on volume side look like this quarter?
Just one second. This quarter was only 2.7%.
This quarter was only 2.7%.
Yeah,
any
only
specific drag there?
Because the Nepal plant has just started, so it had no effect. And Zimbabwe also only started, I think, March, so it had very little effect.
Okay. And any specific targets for Zimbabwe, let's say in million cases, as to what will be your target for this year or so?
Anand, at the beginning of the year, being the first year, we thought to have a target of 4 million. But, it's 55% of its working falls in the current quarter, which is, so I will not be appropriate to give you the number, but I think overall basis looks we will have to revise this target, maybe anything 50 to 100% actually for that country.
Okay. Okay. So you're looking at much higher growth there.
That's right.
Okay. And Nepal also, as you indicated, because of the plant commencement, now should look at much higher growth.
That's right.
And Nepal is one of the very profitable territory for us, so any growth there really matters for us.
Right. Perfect. And this domestic growth trajectory that you achieved in the double digits, essentially that should accelerate, right? I mean, given because last year was GST per se, and you had a tough 2Q quarter there, should we be looking at higher growth rates then for your big quarter?
We should definitely be looking at growth what we have done in first quarter. I mean, higher we would not like to comment on at this point, but the growths are looking positive and things are looking good.
Okay. And I just missed this, your contribution for new territories that you had acquired during the quarter in terms of volumes, what was it?
Those territories, 6.2 million cases in the Q1 we did. And this year, although we have already stabilized as far as the P&L is concerned, the margins from those territories are as good as, Varun's existing territories are doing. So that's already done. Now the next thing in hand is to enhance the volume because there's a huge potential. We are sitting on a very small existing base. So that's an upside which we have to gradually capture.
Okay. And on a total basis for the full year, incrementally, what would be the volumes that these new territories would contribute?
You're asking percentage of the overall basis?
No, total million cases for the India acquired territories that you acquired over the last 1-2 quarters.
About 12-13% of our original.
12-13% incrementally to the original volumes for India business.
That's right.
Okay. And the new territories currently, the current quarter doesn't capture the complete picture, right? Because this would have come in phases.
Pardon me?
The current quarter volume from the new territories doesn't capture the complete picture because
no, it doesn't because, they came in bits and pieces and we were not organized the plants were not started, so there were a lot of disturbances, deliveries were not happening. So going forward this quarter, you'll see the full potential of this company.
The full potential. So of this plus the Tropicana essentially will reflect in the current quarter.
That's right. This quarter, both Tropicana as well as the new territories will reflect their actual
And just lastly, this Tropicana plant that you're putting up, when do you target to commence it?
Well, we are not sure at the moment. It is definitely not 2018. So we are still working on the technicals, and hopefully by the next board meeting we'll have some clarity as to how long it would take and when it would come, because this is the first time a Tropicana plant is being put by a franchisee. It has never been put by a franchisee.
Okay, and let's say once it commences, it will improve your margin profile for Tropicana.
Absolutely.
Okay, perfect. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Pritesh Shah from Lucky Investment Managers. Please go ahead.
Yes, sir, I have a follow-up. Just wanted to know at the, when quarter one where our volume growth was about 12%, what would have the market grown at the same time, and what would have Pepsi overall grown in India at the same time?
See, we have numbers? I don't think we have the exact numbers at the moment, but it takes a month and a half before the numbers start coming in. So, but I would say we have definitely not lost any market share. I don't know if we have. I'm not sure if we have gained market share, but I think we are pretty well what the market has grown. So we should be at the same.
Now, when you say market here, Coca-Cola plus Pepsi put together.
I'm talking of, no, Pepsi is not fighting with me. I'm talking in my territory, Coke versus us. I think we've had approximately same growth.
Okay. Thank you, sir.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Harsha M. from Fortin. Please go ahead.
So the new plant that you have put in Nepal, what is the capacity and what is the revenue potential?
We have two lines of, put together 920 ppm. And one is CSD glass line and another is...
we have put actually three lines. One is glass line, one is a PET line which makes CSD, which is carbonated beverages, and then we have a water line and also a juice line. So juice and water are two new products which we were not doing in Nepal up to now, and they will only go into production by most probably pretty close to the end of this quarter. So they will not reflect even in the second quarter, which is going to be April, June. But our CSD, which we were short of capacity, will reflect from April 1st. So that will show in our volumes in this quarter.
Any idea on the revenue potential from this? Water, juice and incremental CSD?
I think we are not ready to answer that question. At the moment, we have not done the full maths, but it will be quite lucrative and quite large.
Okay.
Because we lose this full season, so it will actually reflect mainly in our next year's volumes.
Okay. And what is generally, suppose you want to add capacity 2 years down the line, so how much of capacity per million liter, what is the capex required to put incremental capacity of say 100 million liters?
See, it's not in million liters, it's based on million cases. But it would depend if is it a brownfield or is it a greenfield. When it is a brownfield, when we are adding lines, the capex is much smaller. But if we are doing a greenfield plant, then the capex becomes much larger. And it depends which area and how much capacity we are adding. Because if we are putting new lines now anywhere, we actually don't put any more small lines. So even though we run short of product. So sometimes that new line takes 2, 3, 4 years for it to get absorbed. So that's why we are now mostly going to use brownfield plants instead of putting greenfield. Nepal was an exception because of we were not allowed to add any more facility in our Kathmandu plant because of pollution and environment issues being in the city. So we had to put a greenfield in the Tarai belt, which was, it would give us a major cost saving also in freight. But otherwise, we are going to avoid greenfield plants now.
Okay, so how will it work? I mean, what will be the asset turnover? So if you put 100 crores of capex, how much of incremental revenue can you generate, say, in brownfield plant?
About 2x.
Okay.
2x to a greenfield and maybe more for a brownfield.
Okay. And finally, what is the margins that you will do, that you're doing right now in Tropicana? You're just not manufacturing, right? So what is the margins, EBITDA margins?
Our margins will remain, we are making sure that our margins don't come down even though we are not manufacturing. We are going to maintain the margins which we are doing in our CSDA and juices and water. And will continue, and obviously our margins would improve once we start manufacturing.
And it will be similar to what you are doing right now, right? In terms of...
Yeah, absolutely.
Okay, thanks.
Thank you. The next question is from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, sir. Just a small follow-up from me. The Tropicana, the juices part, which you said margin profile will be similar once you set up your own plant and manufacturing. What would be the margin profile currently, sir, of this product that you are only distributing?
Sameer here, we are just doing the trading here in this case. So we are getting something like a very small margin to take care of our primary freight, secondary freight, and fixed selling and distribution expenses. And it may be some, percentage points, low single digits. And, one complete quarter we have to do, but we are, in our projections, we are taking it additional revenue, but with, very little margin. We are not considering anything at this moment. Whatever comes will be only upside.
And this would be the case for the whole of CY18, I would assume.
That's right, because the volumes as of now are so small and we are putting organization, etc. Our focus in this moment is not to, calculate volume on this incremental activity, just to establish it with a strong base and then get into a manufacturing franchise with PepsiCo, followed up with the production facility. And once that's established, as Chairman said, to have the margin profile something equal to the CSD. And we would definitely like to, invest our this time and energy into this because this is something of future and comes with a huge potential.
Just one more question, sir, from me. You mentioned about how low sugar costs have helped. There are rumors about sugar cess being imposed. Any thoughts on that? How you would, tackle that kind of a situation?
That news was very scary, and you must have seen in the same, representatives from the Big Four how they said that, the basic spirit of GST was that about a dozen or 14 different acts which were subsumed in GST. The basic concept of selling GST to the nation gets vitiated if you start introducing cess again. And if you have to just, start once and then there is no end. So it was very, it was also stated in the same news item that it will be very difficult, to approve this, and they will have to pass a special, this thing, take a vote in the parliament. Let's see what actually happens. Let's keep the fingers crossed.
Okay.
For us, it won't matter anyway this year because we have pretty well covered for our season, so we've already bought in the sugar. So.
Oh, okay. That's helpful, sir. Thank you.
Thank you. Ladies and gentlemen, you may enter star and 1 if you wish to ask a question at this time. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
So no more questions? Okay. Thank you once again for your interest and support. We will continue to stay engaged. Please be in touch with our investor relations team for any further details or discussions. Look forward to interacting with you soon. Thank you very much.